Here you go. Nasdaq 100. Weekly 2012 $2,800 put. We did this trade yesterday on the bottoms. Actually, today on the bottom in the last print, 789. When the Nasdaq comp had the reversal up here at my pivot line that I drew with my trend line, and I said that that was going to be the top right up here, and bam, you got, look at how wide the bid and ask is. I can sell at 30.70 and make my money. These are the last prints. This is the same one that we did yesterday. And what am I doing? I can sell over here. I'm in control. Now, here's the thing. If you want to know if fear is coming into the market, when the bid and ask gets real wide, they will make people pay the ask. And if they do, that means that this beaten down put side, deflated side of the market goes up in value. And when you're hit here wholesale, you've got the luxury of letting that market get well above you on this side of the market. Now, it works the same ways on the calls too now. It's not just one-sided. It's just that the markets are overbought and the $2,800 weekly put index, which is intraday, 2 days in a row, knowing that this side of the market has been marked down to deflated price ranges, there must be a price adjustment. As I said in the alert yesterday, is starting April 1 or the first trading day of April, going out 90 days, you will see that first 90-day price volatility expansion, both the long side for the bull, but also for the bear side of the debit, to get more of an equally bull and bear market, even though that the bull strength is much higher than the bear. But nonetheless, the long debit and the short debit must be weighted with increased price volatility moving forward. And this is an all-time alert ahead of the fact, because right now it's 8:47 a.m. Pacific Standard Time. The date is 3/28/2012. And let us not forget that the analysis is being said now. So when that comes upon you and you see it happening, you're going to say, well, how did he know that? Well, I can tell you, in high frequency models, you get the bull side of it, and then you have pullbacks. And when they do pull back to the support level, they still have that big bull bounce off of them lower support levels once they get there. And once again, it's all about understanding how I take that wholesale, and we did it yesterday. Same contract, same thing again today. There's only 5 of them. But look, 32 by 34.40. You sell over here. Let's say I want to sell 34.10. I can make them pay. They will pay the premium. Right now, the last print is 17.89. Now, if I wanted to dump them, look at how wide the bid and the ask is in the index weekly. Now, yes, we do have a course. It's about $3,500 a week, but we do take you through the S&P and the Nasdaq and equity weekly expiration wholesale bid and ask. And the reason why you can believe it is because we prove it. And if I were you, when someone can show you the truth before the fact on a daily compounded level and put the prices out before the market, that is something that I would believe, because it has measurability to the entry and the exit and the mechanics of a market maker at that wholesale bid, selling back to who? Selling back to the public at a higher bid and ask, or another trader for that matter. It really doesn't matter. What matters is you know how to get hit on certain days when markets are having a pullback, as they should, from overbought levels. The bull is overbought. It needs a pullback. We said 2 to 4 weeks of how that pullback would look like. And the higher that you go up into the resistance channels back in year 1999, 98 period, and even the 2000 top area, but you look at where the Nasdaq comp and all of these indexes have come up, it's great. Just remember, even though you will have to take that course, because when you know the mechanics of it, it'll be the best money that you ever spent. I guarantee it. And the reason why I guarantee it is because my accuracy doesn't lie. And I can step up behind it where other people can't. I don't see how they can do all of this before the fact. No, I don't. However, it's very important that we care about you as a public person and how unfair it is to you. And the thing about it is, we don't like that. And yes, we do have programs that can address it. And we spent most of our life doing just that. How to get hit, how to be in control of the bid and ask, how to get hit down here below that market, how to take advantage of directional bull movements and bear movements and high frequency model computing machines. And like I said, the glory is that that Apple trade would go into negative territory, and it broke the intraday gap opening low just as we said it would. Here, now, live, 8:51 a.m., 3/28/2012, and we're having a good old time. And why? Knowing how to steal that low bid. They remember that these contracts were marked down $30 or $40 already, and that's why that side of the market would work with the bull exhaustion reversal in the Nasdaq 100. And you can see the value going higher and higher and higher and higher in the last print at 1789, and let this be the true example about that wholesale entry, the power of it. The part of the mechanical side of it, the gimmicks that they use and how they take the premium down and how bull runs work and bull exhaustion prices and all the other good things that you can't get. But the part that you can't get is when it comes to getting down in here in equities like Apple outside of that contract. And I'm just going to conclude it that we will, and you will see that people will have to pay a lot higher price for the protection now on that. When we were here making a market, but look at, that's double 35, 85, 38. Look at that wide bid and ask. Last print 1789. Let this be the classical example that on 3/27 of 2012, yesterday, late day in the market, the same put option was done with the same live video there. Please go there and look at it. Please put this video as the follow-up. Once again, it's about how to take advantage of a weekly index, whether it's a call and or a put. It's just that the calls are going to get marked down, and when the calls are marked down, we'll buy those and sell these at the high.